Good morning, traders. This is Michael coming to you from GammaEdge on February 5th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars, sentiment, structure, and trend. And obviously, we'll start with the market trend model for today. We continue to see an upward bias in the overall MTM. Buyers continue to remain in control, as we see here. Our bolded CT, which is our shortest term intraday moving average, continues lower left to upper right above our moving averages that are kind of our intermediate. We continue to see the red above cyan and expand to the upside. So obviously buyers continue to maintain control of the overall market. And we see an upward slope of the red and cyan, which gives us the bias upward. And long term, we're continuing to look to put money to work if we still maintain this upward look of the market trend model. Conversely, we have seen some not erosion, but not an upward advancement of the overall structure via the options market. So we'd like to see that come to fruition and start to be in agreement with the market trend model moving forward. So we give a little bit more weight to the bulls. But again, we continue to see the MTM be strong and buyers remain control on a short-term and long-term basis. Jumping right into the SPXP, all expiries turned on. We are put dominated, as we see here, via the full complex, but we do have a kind of a mess of overall in-the-money puts above us, in-the-money calls below us, and just a hodgepodge of areas in between. We do see the transition here at 60.35 to 60.55. As a pre-market, we'll probably open right around the bottom of the transition level if that maintains spot price into the open. So it's going to be an important area to move above, at least on the all expiries. We have labeled the JPM short call up here, strike at 61.65, and the converse delta associated with it. But we do have a decent amount of in-the-money calls below us also, definitely down towards that 6,000 level, which is peak X that we'll continue to watch. If we see any weakness, that would be the level that I'd anticipate some sort of price reaction. And I would look forward to be supportive as of now. If we get below 6,000, I'd anticipate some more weakness, possibly down towards that 59.75 level, and then ultimately down towards 59.50. To the top side, we see obviously peak X there at 60.60. We have double strikes up there that could be the overhead ceiling and provide some dampening effect as we continue to move up around those levels. If we do get above 60.60, then we do see a path up towards 6,100. Obviously, these in-the-money puts here are just above us, but not a significant amount. So again, we could see a path fairly quickly above 60, 60, 60, 65 up towards 6,100 if we see the out of the money call speculators come in and drive price up towards that level. So we'll continue to watch this on the full complex and put dominated. But the 0DT is call dominated, so we'll go ahead and move to that. Obviously, we've talked about the IC yesterday and today. We are call dominated, so obviously dampened volatility. Implied open was somewhere around 60.10, 60.15 when this was done. We'll look at it here. So we're at 60.15. So we'll probably be opening somewhere around there unless we have some news come out and see spot price change. So these presumed shorts below us will be supportive as we move down into that level. They will push us back up. And then obviously the presumed shorts above us is 60.55 and 60.60, which I just discussed, that double strike on all expiries as well as 0DTE will most likely be an overhead weight. Would push us away from those. So that's obviously the purpose of the IC is to maintain between these legs. We did violate that yesterday, but we'll watch that today. Again, these are weak ICs, as we've discussed the past 2 days. So we do have INGEX and PGEX that's pretty much around those legs also. So maintaining between that may be a high possibility today, even though they are a little bit weak. If we start moving again above that 60.55, 60.60, we do see a path to move higher, maintaining or watching the vol D and obviously the vol M command to see if we see positive call and put centroid slopes and out of the money call speculation. Again, as I discussed, below 59.55, 6,000, we may see some weakness down towards the bottom of this transition level, down towards 59.75. Again, this may be sweep levels, though, that we've discussed multiple times that we could just sweep below and then have some transactions and then come back above and not stay below it very long. Outlined, obviously we have our goalpost outlined pretty well for today. We have our if-thens outlined, and then if we stay between the IC and within the overall drunken sailor range, it would just be some choppy price action and not really much edge. So for me, we'll move to what my thesis is for today, or kind of how I'm looking to play. A quick tip for TradingView, if anybody doesn't know this, you can copy and paste from text images. So what I like to do is I like to copy and paste our SPX game plan onto my TradingView chart. So it's all there. You just snip it with your Windows or Mac tool and just drop it as an image onto the TradingView chart. So then I quickly have all my reference for the SPX game plan on the TradingView chart as price is moving throughout the day. I can move these, but I already have those quick references there. You can also obviously manually draw the lines, but this is much quicker and much easier. You can do this for any stock actually, or any index ETF. I'll do it for SPY and Qs also. I'll throw a little quick blurb on there, so you have some text to look at. So anyway, we've tested the bottom of the drunken sailor range pre-market down towards that 59.95 level. We see transitions as we've outlined here in the SPX game plan. 60/40 isn't pretty important. And then obviously we have on the full expiry 0GEX and COTMP lined up there at 60/35. So what I like to do is I like to give it a little bit of an edge. It's an area, it's not an absolute for me, as we discuss here at GammaEdge all the time. So we could obviously push above 60/35 and then get some sort of reaction and stalling or rejection around that level up towards, I've drawn it up towards 60/44, but that's just because of a little bit of TA addition there. But this is just basically an area that I'll watch for price reaction. And then to the downside, obviously the bottom of the drunken sailor range, if we lose that, we'd look for a move down towards 59.70, 59.75 with our outlines and our if-thens in the SPX game plan. So just wanted to add that little tip for the day. It's nice that you can drop that on there, and those just quick reference all day long, back and forth. Or if anything else gets posted by any of the GE team, you can clip it and drop it on there also. So anyway, let's make it a great day. Obviously, we have the IC Iron Condor in place, so we'll continue to watch those legs intently, and we'll also watch the vol-am/vol-d command as well as the MTM to give us some directional status for the day. So that's it. Everybody make it a great day. I'll be in the Discord in just a few minutes. Thanks.